welcome everybody. Quick tutorial video here. Important things going on. First off, many of you may be familiar with the we've been talking about this buy signal. Well, it just finally exited the trade. Our short volatility did get stopped out earlier today. Most of that was due to the some kind of a comment. We didn't like that trade to begin with because low closed dojis after downtrends aren't quite a low closed doji, but it was a valiant trade. We've had, as you can see, blue lines represent the entry and the exit, and blue line represent profitable trades on TradeStation, and then the red line represents a loss. So we've been in this trade since a week, Monday, and that's what I wanted to point out to you. It did a great job on the SPY system, did a great job on the VXXB as well. And more than likely, because now we have this kind of volume convergence pattern, if you look at what I'm reflecting here from the overall volume pattern, this is a proprietary volume tool found exclusively for our members, VIP members of the Person Lifetime. But it whether you're using on balance volume, whatever you're using, the moral of the story is we had a volume convergence pattern in the volatility, and maybe volatility traders know something more than the SP traders. But here's a thought. If we get above that line in the sand in the next day or two, it will probably launch a little upside. And if we do, obviously there's a couple levels, a line in the sand, there's a gap here down around 280 or so. Yesterday's lows will be important. And if we close underneath that line in the sand, then we have a more sophisticated generated sell signal. We might get one here today, by the way. And if now you're thinking of going short, the last thing you want to do is go short when the system's long. So now it's no longer in a long position. It is flat. We have a lot of stocks. Our day trade models today, our 15-minute system went short, went long, went short. I mean, it did a great job. Our Euro currency model did a great job in the time frame that we had a trade. Went short, went long, and took a couple tick on a stop out, and it's done. So in a market that didn't go anywhere for the American session, U.S. Open outcry session, it did all right. Next, the 5-minute model on the S&Ps did a good job as well. I mean, it's been all over the board. Had a nice long, went short. It trailed the stop right before the bad news. Got clipped. It went short, did a nice job, and it, as you can see, went short right there. So the market, as an algo choppy day, this is an algo system that we try to let our users piggyback what the signals are doing, and you can see clearly where the stops are, etc., etc. So that's kind of a neat thing to follow through. Now, I'll put out another video about how we end and go into other stocks, but one of the things that I wanted to maybe bring to your attention right now, and I'll bring this into focus if I may, is looking at the board right now. This is a 60-minute board for our major market movers. Now you could see here, these are all sell signals. Look at the Dow is in a 60-minute sell signal. GDX, 60-minute sell signal. We are seeing a lot of new signals populate on our radar screen. Biotech is going down. Russell's already weakened. The Qs, the Spider, the Energy, XLE, XLK. That's a lot of sectors giving up a lot of love. And that's good. I welcome that. I welcome that because we are looking for this market to fail at this resistance. It's one of our calls. We just didn't want people to get short prematurely. How do you go short when a system's still long? Right now, XLK will form a very strong low closed doji pattern sell signal under a bearish volume divergence. What do I mean by that? Well, first and foremost, it has a PPS sell signal, and you can see that right here. Now, it won't conclude until the bar closes. The volume over here and over here, you can see there's a trend in the volume. It is down. This is on balance volume. I don't find it as reliable as this volume indicator right here. If the volume histogram goes negative, this gives better outlook that there'll be maybe a little bit more to the downside in the market. When we see, and that may sound adolescent, but what it is that when markets are under bearish divergence patterns, they're more susceptible for deeper corrections. Now, a 60-minute divergence does not tell me to throw the baby out with the bathwater. What it does tell me is that the recent uptrend has run out of steam. And a week ago, when we had sold here, we covered, we went long, our system went long in the spiders right there, and it's just now exited. That's a really good run in the market, friends. What I could tell you is if we do generate, and what we will need to see besides this little volume divergence here, what we will need to see if there's going to be a bigger pullback in the market. After all, we have a little bit of a kind of a gap in the market over here that may need to be filled. And if we start to make, first off, I mean, all we've done, we opened higher and we're trading lower. We haven't even closed below this white line in the sand. Look at these white lines in the sand, right? They make continuously higher swing lows. So the moral of the story is we have to start to form lower high and start to close underneath those lines in the sand. And if we can do that, then I suspect we'll see a bigger pullback in the market. I hope this just gives you an intraday. This is the XLK now. This is just one subsector of the overall market, not the entire market. But the board today, as you can see, turned pretty negative pretty quickly. The sell signals that have ensued have added up pretty quickly. So with that said, let's go over, that's the intraday. Here's the end of day. Oops. We've got a big move down in regional banks, 2%, 1.5% in utilities. Transportation won't get out of their own way. If you're a Dow theorist, a couple things we need to see. We need to see participation in energy. We need to see participation in transports and energy. We dumped our XOP position the other day, good, bad, or indifference on Friday. We took profits on it. One of the main reasons is because, let me share with you that reason. The relative strength, this is the PMC tool, can be found on Thinkorswim platform under John Person. It's an exclusive relative strength tool. But one of the things that I did not expressly like about the energy sector was as it was moving up, the relative strength did not improve. Volume was not moving specifically. More importantly, even on balance volume, you can see was not moving up. So therefore, we had bought in on that dip against Person's pivot support. We had a 60-minute intraday buy signal on Friday, and we bought against support. At the time when we bought in XOP on that level right here, the relative strength was rising, and we were starting to see a little bit of increase in volume. 4 days later, on a nice run-up, guess what? I said this market is not conforming. We should have flipped into an express buy signal, and it never did. So therefore, it was running out of steam. So if energy can't participate in this rally, and it couldn't lead us, and the financials can't lead us, then my friends, that's why I would say that we're more apt to see a pullback in the market. I hope you enjoyed at least getting a look-see in how we look at the markets and use the tools that we've put together for the last 38 years, all in a nice, nifty package, and let our clients watch these signals, trade these signals, and piggyback against them in real time. So, in fact, the spider, as we were talking, actually not only got out of the long, but just went short the market, and it's already up a couple bucks. Thank you for watching, everyone.